Hey guys, it's Sasha. Today, Porsche has become a public company in its own right. The Porsche IPO is the biggest European public offering in over a decade, and the stock market is jubilant. Here we have a sports car manufacturer who sold a record-breaking over 300,000 cars in 2021, and Porsche is one of the few manufacturers out there that is actually getting stuck into electric cars with a Taycan. And naturally enough, investors are licking their chops because here we have an opportunity to invest in the next Tesla. The company shares were valued at 82.5 euros late last night before trading started on the Frankfurt Stock Exchange this morning, and that means that the initial valuation of the company was 75 billion euros, which these days is equivalent to about $73 billion, right at the top end of the originally stated range. And in early trading, the share price of Porsche has gone up to over 86 euros. And if you're trying to look it up and go to Google and type in Porsche share price, you see this company called Porsche Automobile Holding SE, which is trading at 62.8 euros per share. And if you click around, you can see that this company has been publicly traded a little bit longer than 1 day. And this is where the big problem starts. Because this is not the Porsche that has just gone public. Porsche is a company that was originally founded in Stuttgart in 1931 by Ferdinand Porsche and his son-in-law Anton Piech. And when the original Mr. Porsche and his son-in-law died, their families inherited the shares of the company, and they hold a giant chunk of those shares to date. Those families owned Porsche SE for 80 years, and Porsche SE is a holding company that owns Porsche AG, the company that actually makes Porsche cars. Things began getting a bit more complicated in 2005 when Porsche SE started buying up shares of Volkswagen. The Porsche and Piech families got incredibly greedy and started taking out bigger and bigger bank loans to buy more and more Volkswagen shares, and owned about 50%, just over 50% of Volkswagen, with options to buy another 25% when the financial crash rolled in 2008. Banks stopped lending the Porsche and Piech families money to fuel the exuberant spending, and as the financial crash unfolded, they couldn't afford the repayments on their existing loans that they already took out, and they were forced to start selling some of their Volkswagen shares to raise cash. As debts and taxes piled up, the Porsche family had to massively restructure the company in 2009. They sold a portion of their shares to the Qatar Investment Authority and merged two companies that they owned together. Not quite directly, but a sort of merger. Because remember, Porsche SE owned all of Porsche AG and a controlling stake of Volkswagen at the same time. In 2012, the complex merger took a further step where Volkswagen formally acquired Porsche completely. So the Porsche and Piech families no longer owned Porsche directly, but their holding company, Porsche SE, owned 31.4% of Volkswagen shares, and because some of those shares have preferential rights, they actually owned 53.3% of the total voting rights. And until this morning, Volkswagen owned all of Porsche. There are two other major shareholders in Volkswagen: the state of Lower Saxony, that owns about 12% of the total shares and 20% of voting rights, and the Qatar Investment Authority, which owns another 11% with 17% of the total votes. So those three big shareholders own about 80% of Volkswagen's voting rights and have complete control of the company, complete say on what they do. But now they are spinning off Porsche AG, the company that makes Porsche cars. So now you get to invest and own a bit of Porsche and have a say in the future of the business, right? Well, no. Because you see, this IPO is just another giant money raiser for the Porsche and Piech families. It seems like the same thing is happening all over. You get to hand over a load of your money thinking that you are buying Porsche shares, and as a genuine Porsche shareholder, you might have the same sort of rights as, say, a Tesla shareholder has in Tesla. Well, unfortunately, that isn't the case. Porsche's IPO is creating two types of shares: voting and non-voting. Voting shares mean the owners can have a say in the company, vote on key matters, take an active part in shareholder meetings, all of that. Non-voting shares mean you can do none of those things. You own some equity but have no say whatsoever. So if the company in the future decides to screw you over, maybe dilute you out, or issue even more preferential shares, take the company in a direction you don't like, maybe try to get money out of the business, you are a worthless pawn with zero power. And yes, you guessed it. The shares being floated on the Frankfurt Stock Exchange this morning are the non-voting ones. Porsche have a grand total of 911 million shares, which is a nod to the flagship 911 model, which incidentally the Porsche family have said will never go electric, and that might begin to make you just think a little bit about what the direction that these families will want to take the company in and how that might reflect on the business in the future. Because remember, these are the same people who fired Herbert Diess from Volkswagen when he was CEO because he was trying too hard to take that company electric. And yes, those guys have the controlling shares, the ones that have the voting rights. Half of the 911 million shares that Porsche is now going to have are voting, and the other half are non-voting. None of the ordinary voting shares will be available for the general public. You can't possibly let regular schmucks like you and me from the street have a vote and have a say. What if they aren't stuck in the dark ages and actually want the company to do well, maybe go electric, maybe do all these things? That cannot be allowed. Volkswagen will get to keep their ordinary shares, but the Porsche and Piech family struck a deal where they get to buy another 25% of the voting shares in Porsche plus one extra share as part of the IPO. They're one extra share to make sure that they can block any important votes. And of course, they don't actually have the cash for this, so they are reportedly raising a huge load of debt to finance this acquisition, but they don't have to carry that debt for very long. Let me explain. So the Porsche and Piech families will own 25% of Porsche's voting rights. They will also continue to own 53.3% of Volkswagen, which owns the other 75% of Porsche's voting rights. So they will own 65% of the votes after the company has gone public. The people buying a Porsche shares this morning will get to own a small slice of the 12.5% of non-voting shares that are being listed on the market. When you invest in an IPO, the good thing about it normally is that you're buying up shares and the money that you are paying goes onto the company's balance sheet because the company is selling you those shares. That's what an initial public offering normally is, but this IPO is not your usual IPO. No, you are not putting money into Porsche's coffers so that the company can then use that money, maybe build some cool factories, propel themselves into the future. No. You are paying the money to Volkswagen because they are selling you the Porsche AG shares. And of course, in the announcement of the Porsche shares going public that was released last night, there is this little paragraph at the bottom that most people won't read. Volkswagen AG will convene an extraordinary general meeting in December 2022 at which it will propose to its shareholders to distribute in the beginning of 2023 a special dividend of 49% of the total gross proceeds from the placement of the preferred shares in the sale of the ordinary shares. So Volkswagen is proposing to its shareholders that half of the 9.5 billion euros they have raised from this IPO will be paid back out to the shareholders. And remember also that the Porsche family are paying an additional 10.1 billion euros for their 25% voting shares in Porsche as well. So the Volkswagen shareholders will have raised about 20 billion from the sale in total. And who are the shareholders? Oh yeah, the Porsche Piech families, Qatar and the state of Lower Saxony. So 1/3, somewhere around 6.5 billion euros is going right in the pocket of the Porsche and Piech families. Half of it will arrive as cash in early 2023 because of that special dividend. The other half will be sitting on the balance sheet of Volkswagen, which they also happen to own a giant chunk of, which is very convenient because that pays for the majority of the shares that they are buying in Porsche in the first place. Before this IPO, the Porsche and Piech families owned 53% of Volkswagen voting rights and 31% of the total equity. Now, Volkswagen owned all of Porsche, so they owned the same slice of Porsche AG as well. Now, after this IPO, the Porsche and Piech families will own the same amount of Volkswagen as before, but now they will own 65% of the voting rights and 36% of the total equity in Porsche. So they will own more of Porsche and they will get to collect 6.5 billion euros from the investors buying up all the hype. They just acquired 12% more voting rights and 5% more equity in Porsche, and 5% more equity of a 75 billion euro company is 3% 3.75 billion euros. But remember that they only paid 10.1 billion for their shares and are getting 6.5 billion back as cashback. Special dividend that they get to approve to be paid to themselves. So the net effect is that the Porsche family will own a whole lot more shares of Porsche and have complete control. But it is the investors who are plowing the money into the business, who are buying those non-voting shares, who are actually paying for it. Investors at the Porsche and Piech families have the absolute right to exclusively screw over in whichever way they want, whenever they want to in the future, because they own the controlling voting stake through the preferential shares. If you found this video useful, please don't forget to smash the like button for the YouTube algorithm. Thank you so much for watching, I really appreciate it, and as always, I'll see you guys later.